There are four key crucial components to trading profitably according to ICT. 1. Determining your bias. 2. Gauging order flow. 3. Executing your entry model. And 4. What do you think that is? That's right, you guessed it. Time of day. A lot of traders are able to master the first three very quickly and easily, but often are missing that final piece of the pie that will absolutely transform your trading. Price first moves on time before you start looking at the other three, so it is absolutely critical that you master this. That's why I am starting a new series on understanding time of day specifically for equities. That's what I trade. So stick around. By the end of this series, you'll have mastered the final piece it takes to trade profitably. All right, now time for the opening range. Now, during the opening range, as I mentioned before, you're likely to see what is called a Judas swing. Now, a Judas swing is kind of like implied in the name, right? It's a betrayal. Like the move that happens first after 9:30 is not typically what will happen for the rest of the AM session. It can actually be a good indicator for what is likely to happen throughout the AM session. So, for example, here you can see that there's relative equal highs that were formed right here prior to 9:30. Price runs against that in a Judas swing form. So some people probably went long here, after this breakout and thought price was going to come and reach out for this high. But really, this is a Judas swing to run lower and take out the sell side liquidity, which is actually the data low of this NFP move right here, this wick. Price has this Judas swing right after 9:30, breaks market structure. You can see this now becomes an intermediate term high because there's a short-term high next to it, another short-term high on the right of it. And so this high should now not be broken. Price comes all the way back up to an OTE of this range, which is basically the 62 to around, I think it's like 75%. I can't remember the exact numbers off head. Around 75% of the retracement of this move right here. Price returns back to that, doesn't take out this high, and then you can see the AM trend now kicks off to be bearish and takes off and takes out these relative equal lows right here and the data low sell side. So again, Judas swing is the opposite run against liquidity, which is going to be the opposite direction of where price is likely to go for the rest of the AM session. Now, you can have a Judas swing, but also you could also not. And typically when there's not a Judas swing, there's an immediate expansion. So you can see here at 9:30, also, by the way, keep this in mind, I have the screen right now, this particular screen right here, toggled to RTH instead of ETH, which is regular trading hours versus electronic trading hours. Regular trading hours basically is what it sounds like. It's the trading hours that are typically exposed to the regular amount, where right after 4:59, trading doesn't pick back up until 9:30. That's what this screen is. However, there's now electronic trading where you can actually see trading post 4:59. So it has that whole gap, which is typically what you'll see on the average trading screen. However, when you toggle to RTH, you can see this large gap in efficiency, right? So there's a large void in price that formed overnight in the regular trading hours. And typically that gap will get filled. So about 70% of the time, actually, the consequent encroachment of this opening range gap right here will get returned to in the first 30 minutes of trading. Okay. And so you can see that when we open up, we immediately expand. Instead of having a downside move to run up, we immediately expand with a lot of speed and a lot of energy. This is typically what will happen on days where you see immediate expansion. Immediately expand and we come back for this consequent encroachment, which would typically get returned to 70% of the time, as I had mentioned, within the first 30 minutes of the trading day, according to ICT. And, on days like this, what you can see here is that if we're showing an immediate willingness to want to fill in this consequent encroachment of the opening range gap, and it's coming with a lot of energy, typically your bias will be to see this whole opening range gap filled throughout the AM or later in the PM. Another example of an immediate expansion is actually kind of vice versa, where we actually don't fill the whole opening range gap. We actually immediately expand away from it. So you can see we're still toggled to RTH here. So this was 4:59 last night, and then the 9:30 open, right? You can see that there's a gap in price here. Price returns back to this consequent encroachment and then leaves the rest of the gap open and immediately expands away, right? Within the first 30 minutes of trading. And what this will set us up with is typically a continuation of that move throughout the rest of the AM session. All right, so price will actually just continue to expand away for the rest of the AM session. On days like this, it actually can be one of my most profitable trading days because once we leave this opening range gap, open, and I know price is drawing to some higher level on like the daily or 4 hour, 1 hour, then I'll be very confident in taking straight up longs, no matter how much in a premium we are. As long as there's a short-term purge of liquidity and a break of market structure, I'm going to take that trade, and my stop loss is going to go below the recent low that purged the low right here, for example. Break of market structure, there's not a fair value gap. I enter right there, and I let price ride, because price is likely to run up higher until it reaches its liquidity target for the day. And all the short-term raids are typically going to stay intact. Now, this is an example of when the opening range gap stays open. And it's actually better if this opening range gap didn't even get filled at all. If we didn't come to this constant encroachment at all, and we actually just immediately expanded it away, leaving this completely open, that would have told me our price is even stronger in terms of going higher. All right. And then lastly here, what we can have is a consolidation, right? So typically when you're seeing that 930 to 10 open range, right? Notice how the whole range is a consolidation right here. This whole range here is a consolidation, but this 930 to 10 is a continuation of that consolidation that started from over here. Price took out the sell side and then it took out the buy side, but it's not really going anywhere. It just came back into the range. Typically when this happens, this is indicative that the 10 o'clock move, that the AM session is likely to be consolidatory in fashion for the rest of the 10 o'clock AM session until around 10:50. So when you're seeing consolidation in the 9:30 to 10 o'clock range, typically price will consolidate for the next hour until around that 10:50 macro, where you can see here, this is a 10:50 macro right here. We have a short-term raid on liquidity right here, comes back into this 1 minute order block, and then we break market structure and price starts to continue, and price finally escapes this consolidation, right? So that typically will happen around that 10:50 move if it's been consolidating for the first part of the AM. And then lastly here, let's go into the AM trend. So as mentioned before, after 10 a.m. is typically when you're going to see the AM trend, right? And so let's break down this slide a little bit. Prior to 10 a.m., you can see here from 9 to 9:30, or 9:30 to 10 a.m., sorry, you have this opening range right here where you have this Judas swing in this orange box, right? So the Judas swing is a run against sell side liquidity. And where are we actually drawing to? We're actually drawing to a daily fair value gap BISI, which is this blue line. We draw to that BISI. We have another short-term rate on liquidity, and then a break of market structure going to 10 a.m., reacting off a higher time frame PD array, right? Daily FVG. We have a short-term raid, break of market structure, and then a fair value gap. That's the 22 model. We enter right there. Stop loss goes below this breaker move and also this 1 minute order block and fair value gap. And you have this inversion right here. So that's 4 PD arrays. Price should not break through those if we're still bullish. Price then kicks off the AM trend post 10 o'clock. So from 10 to 11 o'clock, you can see price is running higher, right? And it just continues higher throughout the rest of the time of day, all the way even until 11:30. And then 11:30 is when you actually can see a run against liquidity. So we'll actually be going over that in the lunch session version. But, I actually didn't have a slide prepared yet on the seek and destroy consolidation section, but I'll add that to the PDF actually after. But it's really just going to be this slide, which I told you again, the New York session, when you don't have the AM trend, it can actually just consolidate, right? So look, post here, 10 o'clock, we're just consolidating. And it's not really until 10:50 that you can see that move. And back test this, you'll see it on days where we consolidate. It's typically around that 10:50 macro where price actually starts to move. So if I'm seeing that the AM session is, in a consolidation, I'm not going to take a trade until 10:50, no matter what, right? Because like I said, price moves on time of day first. A lot of times that you're taking a loss, even though all the other 3 check marks will look perfect, you need to wait for the appropriate time of day, right? And so hopefully this has been helpful. This concludes the lesson for today, right? This is part 1. In the next section, I'll be talking about the lunch series. Also, by the way, make sure that if you like what you heard, press that like button. Don't forget to subscribe. Join that free Discord below with any questions. And also you can get this PDF. And I'll see you guys in the next video. Peace and love.